Hello everyone, thanks for joining us. My name is Chris Lee with Keller Williams here in North Dallas, and I'm sitting here with Justin Belisle. He's the producing branch manager at First Bank, and we're going to be covering bridge loans. And we're going to be going through what a bridge loan is, how you get one, and why you should get one or should not get one. So, without further ado, Justin Belisle, what is a bridge loan?
Well, a bridge loan is just that, Chris. It's a loan that's going to help you cover the gap between home A, which is your current residence, to home B, which is going to be your future home. So what we do is just think of it just like that, a bridge from A to B. So let's say that you're sitting in your current home and your home is worth $300,000. Okay, and I'm just using round numbers for this example. You owe $150,000 on the current home. Well, you have $150,000 that is sitting there in equity. So what we do is we go ahead and we will give you the equity out of your current home in order to purchase a new home. Okay, so we give you that $150,000 to put towards a new home. So what we'll do, and again, just in this example, we're using round numbers, but let's say that you want to purchase a home that's $500,000. Okay, you have $150,000 that's in your current home. What we'll do is we'll go ahead and give you 100% financing on that $500,000 home. Okay, and we will give you a bridge loan for 6 months with that equity. So in fact, what we do is we give you 6 months to sell your current home. Okay, once your current home sells, then we turn around and we do permanent financing on the new home that you just purchased. So it's really, and as you know, in this market, Chris, it's taking a little bit longer for you to sell your home. So it kind of gives you the benefit of pulling the equity out of your house without having to sell it first.
Yeah, and what that adds up to, the benefits, you move once, you're sitting back wondering, you need a new home, you need more space, you have kids, but you don't want to move twice. You don't want to make a transition into a rental, because you need that equity out to make all the numbers work. So the benefits, it may not require a down payment.
That's correct.
As you covered. Payments on the new home are deferred.
Yep, so let me go into how the payments work on the bridge loan. So when we come in and do the bridge, and there's different companies, in the Metroplex that offers bridge loans, and they all work a little bit different. We are really kind of one of the pioneers that are out there and doing things totally different than any other bridge loan company. But what we'll do is we will actually defer your payments on the bridge loan. So they're interest-only payments for the 6 months that you have the bridge loan. And what we do is we will take those 6 months and accrue them based on a per diem basis. So let's say that you only have the bridge loan. Let's say it takes you 2 months to sell your house. You only have the bridge loan for 3 months. We only take 3 months of those deferred payments, and what we do is we add them to your payoff of your old home, and then we settle up that way. So during the bridge loan process, what's really cool about the bridge product at First Bank, not only do we defer those bridge loan payments, the only payment you have to make when you get a bridge loan is the payment on your current home, the mortgage on your current home, home A, your primary residence, until it's sold. So you don't have to worry about making 3 payments, which would be the payment on house A, the bridge loan payment, and then the payment on house B, which is what everybody else in the Metroplex is doing. So it's really a pretty unique product. Again, one of the huge benefits of a bridge loan at First Bank.
So who could benefit? Let's go through a list of people that could benefit from this. Mm-hmm. Customers who don't qualify for 2 mortgages.
That's right, because again, in this situation, the only thing that we're actually counting against you is what the payment on the permanent financing is going to look like at the end of you selling your home. And go back to our original scenario, we would be qualifying you on that, $500,000 new home. We're going to go ahead and give you 100% financing. You say, Justin, at the end of this deal, when my house sells, I want to take $100K of our $150 and put it towards the down payment, and then you're only financing $400,000. So all I have to qualify you on a debt to income standpoint is that $400,000 loan. So if you can't qualify for both homes on a debt to income ratio, that doesn't stop you from getting a bridge at First Bank.
This loan gives you the opportunity to be competitive to buy the home that you want. Sellers out there that have a beautiful home that you want to buy that might be attracting buyers, you want to be right in there with them, competitive. Contingent offers are not competitive these days. Sellers are putting them to the side and looking for a more realistic end date, drop dead date of when they're going to be out of that house. And contingent offers cannot do that. So it really helps you on the buy side negotiate a good price with the home that you want, because you're not bringing in any luggage that needs to happen or any dominoes that need to drop in order for this transaction to happen.
That's right. And you bring up a good point, Chris, because it's one of those things right now. Now that there's more inventory, sellers are not really, if you're in a multiple offer situation, and of course Chris knows more about this than me, but I do see this and where our bridge loan can come in handy. If you're in a multiple offer situation and you're in there, and let's say it's a 5 offer situation, and you're in there with a contingency to sell your current home, you're going to number 5, if not even considered on the offer. So it helps you wipe that contingency off your pre-approval or pre-qualification so that you can make a non-contingent offer. The other piece of that what we're seeing across the Metroplex right now is that builders are not taking contingent offers. And who's going to sell their house 8 months before the home is done? So if you're going in with Chris into a builder and you're in there and they're saying, okay, well, we can't take this contingent offer. You have a home to sell. You can't qualify for 2 homes. Are you going to say, okay, honey, let's move everything into storage and go live in an apartment for the next 6 months so we can sell our house and qualify for this new house? We're able to write you a non-contingent offer that you can bring to that builder, even though your home's not even going to be done for 8 months. The only debt to income that we have to count against you is what that final permanent financing is going to be. So it can help you with the non-contingent offer. So just kind of some examples on clients that I've helped with bridge loans, in their specific situations, just to go through a couple to see if any of those kind of would fit into your situation. I had a client who was a veterinarian, and the realtor came to me, and of course he brought home a lot of his patients, and the realtor came to me and said, Justin, I can't sell the house with all of these pets in there. So what we did was we went ahead, we gave him a bridge loan. He got 100% financing on his new house. And once we closed on the new house, moved all of his stuff and his patients into the new home. And then they went back in, did all new fresh paint, carpet, some minor repairs, and then listed the property, and it sold within 2 weeks. Whereas if he had all of his patients in the house, who knows how long that would have taken to sold.
Probably a long time.
Probably a long time, exactly. Nobody likes those smells when they're all mixed together. Another client situation I had, they had to do major renovations on their home, and it required that they not be there for these renovations. They were ripping apart the kitchen, bathrooms. So what we were able to do is give them 100% financing on the new house, on the bridge loan, and they went ahead and closed, moved in. And then they, started the construction on their house, and took a couple, actually almost a month to do all the renovations, listed the home, and sold it within 30 days. So, just because it is a 6-month loan, if you only have it for 2 months, that's great. We'd actually like that. So, anyway, just some specific situations where it may help your client benefit from a bridge loan, or help you benefit from a bridge loan.
That's great. That's great information. So other people that can benefit from this bridge loan, possibly relo buyers?
Yes, as a matter of fact, we do help relocation buyers. And what's nice is that if they're moving from anywhere across the country to Texas, we're able to do a bridge loan on their current residence out of state. It can help your relocation in the fact that you're not coming to the table to your agent with a contingent offer, because agents who are here locally, they're not going to understand the housing market in Ohio. Well, these people have a house to sell in Ohio. How long is that going to take? What's the market like in Ohio? Nobody really knows. So a relocation, if you're somebody who's relocating to the Metroplex and you've got your job transfer and all that lined up, new job, whatever it is, current residence, in another state, we can help you to do the bridge loan here in Texas.
All right, Justin. So we have people out there that have paid off their homes.
Right.
They're going to downsize.
Right.
They say they have a $400,000 house paid for. They want to buy a $300,000 house, but you really don't in this market. Some people are hesitant to liquidate assets. So how would that work for somebody who doesn't need financing on the next loan? How would this bridge loan benefit them?
Absolutely. It's one of those things that we're seeing now, probably more than ever, is a lot of families downsizing in this market. Especially as their kids go to school and everything else. Heck, I'm even thinking about it. My oldest is going to college next year, and it's one of those things where if you have, let's say, in the same situation, $400,000 house that's free and clear, and you want to purchase a new home that's $300,000. You don't want to have to liquidate any of your 401k funds, mutual funds, stock accounts right now. The market's down a bit from where it was, and I wouldn't want to pull money out of investments right now. But what we would do is we would give you 100% financing on that new $300,000 home, and we would hold the interest-only mortgage for 6 months, thereby giving you those 6 months to sell your house. And then you come and you say, Justin, we don't want permanent financing on the new house once we sell our old house. No problem. We just take that bridge money. You take the extra $100,000, put it into any other investment account, and then you pay us off the $300,000, and we call it a day. So it can benefit you greatly owning a home, or if you have a lot of equity in your home and you don't need permanent financing.
That's great information, Justin. Thank you for being here.
Thanks for having me, Chris.
Shedding some light on this great loan. Provides tons of options out there. Keep you with leverage, and gives you a little bit of ability to be flexible. First Bank, Justin Belisle. Please give him a call. There's a link at the bottom. There's phone number. Any questions? Please guide him to him. He can be very helpful. He's helped out a lot of my clients. And if there's any questions you have for me, if you're going to be starting this process, please give me a call. I would love to discuss with you and make a plan. Thank you for watching.